On 2nd of July, GJNSY, OTC, GJNSF, OTCPK, GJNSY announced that it would sell its bank subsidiary to Nordea, OTCPK, NRBAY, NRDEF, for a price of 5.5 billion Norwegian kroner, $660 million. Logically, some questions pop up in investors' minds. Why? Is it the good move? Is it the right price? What about the dividend sustainability? There are all proper questions. Let's try to answer them. The pros and cons of the deal. As in each deal, there are pros and cons. Let's list them and start with the pros. 1. An increase in the solvency ratio, which opens new doors. As announced by the company, the sale of the GJNSY bank will improve the Solvency II ratio from 159% to 223%. GJNSY's capital distribution policy is straightforward. Above a certain level of capital, the capital excess is redistributed to the shareholders. Source: Investors' presentation. In the case of GJNSY bank sale is approved by the Norwegian regulator, the 2019 solvency margin will be higher than the internal target. Then, the management will decide to redistribute the excess to the shareholders through a special dividend. The second option is the acquisition of a small or mid-sized portfolio. This strategy is encoded in the DNA of the company, acquiring small portfolios from competitors, improving the underwriting margins by increasing the tariffs, and declining to renew the unprofitable policies and then gaining market share. 2. A stronger presence in Norway. I know it is difficult to believe it, as GJNSY is the market leader of the non-life insurance market in Norway, but the sale of its bank subsidiary could be an opportunity to strengthen its position in its domestic market. In addition to the sale of the bank, the parties have also entered into a strategic partnership agreement with respect to mutual distribution of non-life insurance and financing products in Norway. And Nordea will distribute GJNSY's insurance products to their base of 900,000 customers in Norway. Nevertheless, cons exist as well. 1. If it is so amazing, why did you sell it? It was my first question to myself when I learned that GJNSY would sell its bank subsidiary. GJNSY Bank was an opportunity to diversify the revenues of the group and increase the customer's loyalty. GJNSY made the necessary efforts to improve year after year the profitability of the bank company. The cost-income ratio enhanced significantly over the years. The profits grew as well, impacting the ROE positively. So, why did GJNSY decide to sell its bank? I do not have the answer, unfortunately, and do not think the sale has been decided to offset the drop in the earnings. Nevertheless, it is a point of attention for the next quarterly conference call. 2. 5.5 billion. And so what? It is true that GJNSY will receive 5.5 billion Norwegian kroner, $660 million in cash. With this money, the dividend is sustainable for 1.5 years, whatever the profit level is in the future. Nevertheless, the company will have to compensate for the drop in the earnings not to harm its financial position. It means that the insurer will purchase an insurance portfolio shortly to make its revenues growing. Will the acquisition be made at the right price? Will it be accretive? There are the pending questions. Is it the right price then? When a company sells a branch or a subsidiary, the only question that everyone has in mind is it the right price? Fortunately, GJNSY publishes a complete report on its bank activities with a detailed balance sheet. In Q4 2017, the consolidated shareholders' equity was 3.9 billion Norwegian kroner, $468 million. Retreated from the Tier 1 capital, the book value amounted to 3.5 billion Norwegian kroner, $420 million. Source: GJNSY Bank's annual report. In other words, Nordea will acquire GJNSY Bank for 1.4 times its Tier 1 capital adjusted book value. It is a correct price for GJNSY and Nordea. For GJNSY, this price is the recognition of the efforts made over the years to improve the margins of the company. Compared to Nordea, GJNSY Bank was more profitable. for the Nordic bank, with annualized cost synergies of about €25 million. The acquisition will have a positive impact on Nordea's earnings per share from year one, a return on investment of approximately 16% by 2022, and reduce Nordea's CET1 capital ratio by approximately 60 bps per second. It seems that it is a win-win situation. And the great winner is Sampo. It is unusual, but the great winner of this bargain is Sampo, OTCPK, SAXPF, OTCPK, SAXPY. I have only one expression for that. Source: NBCS. It could be surprising, but Sampo is the winner of this acquisition indirectly. By holding more than 20% of Nordea's stake, Sampo will be impacted positively by Nordea's earnings increase. With the growing revenues and the improved margins, Nordea's dividend will remain sustainable and will increase gradually. Then, the cash amount received by Sampo will be more massive over the years. For once, Sampo can thank one of its competitors. Notes for readers interested in other analyses mainly focused on the insurance sector? Please do not hesitate to follow me by scrolling up and clicking on the "Follow" button next to my name to not miss my future articles. Thanks a lot for your support. Furthermore, I will be more than happy to discuss with you on my articles the chosen assumptions for valuing companies' intrinsic value or anything else you consider as relevant. Disclosure: we are long GJNSF, GJNSY. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from Seeking Alpha. I have no business relationship with any company whose stock is mentioned in this article. Editor's note: this article discusses one or more securities that do not trade on a major U.S. exchange. Please be aware of the risks associated with these stocks.